So our mission today is basically to cut through the noise, pull out the really important stuff for you.
Get beyond just the headlines.
Okay, let's jump in then. Overall financial picture, Q1 2025. The first look numbers seem pretty solid.
Oh, absolutely solid. Impressive even. The revenue, top line, $7.44 billion,
Wow, okay.
which is up 36% compared to last year. And importantly, that beat what the analysts were expecting. They thought maybe $7.13 billion.
So they outperformed. That suggests what? Stronger demand, better execution.
Could be both. It points to something going quite right.
And it wasn't just revenue, right? Profitability looked good too.
Yeah, the adjusted net income, $1.57 billion. That's 96 cents per share. Analysts were guessing around 94 cents, so another beat there.
Okay.
And even the standard GAAP net income, that's a huge jump. $709 million this year versus like $123 million same time last year.
That's a massive difference. Shows real acceleration.
It really does. And you look at the gross margin too, 50% GAAP, 54% non-GAAP. Pretty healthy numbers. Suggests they're managing costs well, even while growing.
Their CEO, Lisa Su, I saw she called it an outstanding start. And she pointed specifically to expanding data center and AI momentum.
And that feels like the core story here, doesn't it? The data center segment.
It seems like it. What were the numbers there?
$3.67 billion in revenue. That's a 57% jump year over year. Just massive growth.
57%. Okay, what's driving that?
Primarily, strong sales of their ePYC server CPUs and, crucially, their Instinct GPUs.
Ah, the AI chips.
Exactly. This segment bundles those AI processors and the server CPUs together. And it really highlights AMD stepping up as a serious competitor to NVIDIA, especially for those, big GPUs needed for generative AI.
Right. They're definitely in that fight now.
And it suggests customers are looking beyond the, let's say, the incumbent, maybe finding AMD's tech or pricing attractive, diversifying.
And Lisa Su seemed confident about continued investment in that area, despite, broader economic wobbles.
Yes, she signaled that infrastructure spending there is holding up,
Yeah.
which is a strong vote of confidence, really. It underlines how strategic this market is for them.
And it's not just potential, right? They mentioned actual usage.
Yes, exactly. That's a key validation point. They mentioned big names like OpenAI's O3 model, DeepSeek R1, using AMD chips for training and inference.
Okay, that's significant. Getting used by the big players.
It really is. Shows their tech is performing at the cutting edge.
All right, so data center is clearly booming. Let's pivot a bit. What about the client and gaming segments? How did they look?
Well, combined, client and gaming brought in $2.9 billion, still up about 28% year over year. But you need to kind of split them.
Okay.
The client side, that's mostly PC and laptop chips, that revenue rocketed up 68%.
68%. Wow, what caused that?
Huge demand for those Zen 5 Ryzen processors they launched last summer. That new architecture seems to be really popular.
Ah, the Zen 5 effect.
Yeah, that performance boost is resonating. Plus, they mentioned selling a richer mix, like more higher-end chips, which also helps the revenue figure.
Makes sense. So Zen 5 is a big win on the PC side, but you said gaming was different.
Yeah, gaming revenue was actually down $647 million, which is a 30% drop from last year.
Oh, okay. What you dropped there?
It seems it was mostly down to their semi-custom business, the chips they make for game consoles.
Right, like PlayStation, Xbox.
Exactly. So revenue there can go up and down depending on console cycles and demand. Looks like it's in a down cycle right now.
Gotcha. And the last piece was the embedded segment. That includes the Xilinx acquisition, right?
Correct. That came in at $823 million. Slightly down, about 3% year over year.
So a bit weaker there.
Yeah, suggests sort of mixed demand in the markets that segment serves, like networking, industrial, that kind of thing.
Okay, so summing up Q1. Strong overall, huge data center growth, very strong client PC growth thanks to Zen 5, but gaming and embedded were a bit softer.
That's a good summary. Bit of a mixed bag, but the big growth areas were really big.
So looking forward then, Q2 forecast. What are they expecting? Especially with those China export rules tightening up.
Yeah, this is where it gets interesting. Their Q2 revenue projection is between $7.1 billion and $7.7 billion.
Okay, how does that compare to expectations?
It's pretty much in line. Analysts were around $7.3 billion. So no big surprise there on the surface.
But the China restrictions are a factor?
A big factor. They specifically mentioned the tighter rules on exporting advanced AI chips to China, particularly their Instinct MI300X.
Right. That's gotta hurt.
It does. They're actually expecting related charges of around $800 million in Q2. Mostly inventory write-downs and reserves, it sounds like.
$800 million. Ouch. Ouch. And that hits the profit margin too, presumably.
Definitely. Their non-GAAP gross margin forecast is 43% with those charges baked in.
Okay.
But they added that if you take those charges out, the underlying margin would be around 54%, so back to that strong Q1 level.
So it shows the direct financial hit from those regulations. What about lost sales? Did they estimate that?
They did. They talked about roughly $700 million in lost revenue just for Q2 because of this,
Wow.
and potentially $1.5 billion total through the end of their fiscal year. That's a significant chunk of business.
It really is. How are they framing that? Sounds like a major headwind.
It is a headwind, no doubt.
Yeah.
But Lisa Su's comment was pretty bullish, actually. She said she believes the impact will be more than offset by the powerful tailwinds from our leadership product portfolio.
So basically saying, yeah, this hurts, but other stuff is growing fast enough to make up for it, and then some.
That's the message. Strong confidence in growth elsewhere in other products and other regions. It really highlights the importance of having a broad portfolio.
Okay, so they're banking on other areas to pick up the slack. Did they talk about specific strategies or new developments to drive that?
Absolutely. They're clearly pushing hard on that data center AI opportunity. They even put a number on it, potentially a $500 billion market by 2028.
$500 billion. Okay.
And one move they made was acquiring ZT Systems.
ZT Systems, what do they do?
They specialize in rack-level server design and integration. So the idea is to combine ZT's system expertise with AMD's chips and software.
Ah, so offering more complete integrated AI solutions, not just the chips.
Exactly. Moving up the stack, you could say. Trying to capture more value.
Makes sense. And on the software and AI model side.
They're pushing hard there too. Emphasizing their ROCm software platform. They highlighted getting day zero support for big new models like Meta's Llama 4, Google's Gemma 3.
So making it easy for developers using the latest AI models to run them on AMD hardware.
That's the goal. And showing off good performance, like on that DeepSeek R1 model, it's all about building that ecosystem, improving performance.
And partnerships. Any key ones mentioned?
Yeah, quite a few actually. Core 42 in France deploying Instinct GPUs widely. Dell expanding its AI stuff for telecom using AMD tech. Collaborations in France with CEA.
Okay.
They even formed something called the Open Telecom AI Platform with big names like Jio, Cisco, Nokia.
So targeting specific industries like telecom too.
Seems like it. Plus supporting things like UA Link 1.0 for connecting lots of GPUs together for those huge AI clusters.
Right. It sounds like they're really trying to build momentum across the board, hardware, software, partnerships, systems.
They are. And meanwhile, their traditional strengths aren't being ignored. EPYC server CPUs are still gaining ground. More deployments mentioned at Oracle Cloud, Google Cloud.
Go consolidating that number 2 spot behind Intel and servers.
Yep, and still innovating in gaming and PCs too. New Radeon graphics cards, the RDNA 4 architecture, Fidelity effects updates with AI frame generation, new Ryzen desktop chips with that 3D V cache.
Okay, lots of product momentum. Even in embedded, despite the slight dip, they announced new embedded EPYC chips and Versal socks for things like space application.
Yeah, covering a lot of ground.
So it really paints a picture of a company firing on, well, maybe not all cylinders given gaming and embedded, but certainly the biggest ones, especially data center and client.
Definitely. And navigating this complex environment, Lisa Su called it a dynamic macro and regulatory environment. That covers the China rules, but also potential tariff issues, other geopolitical stuff.
Yeah, that's a factor for everyone in semiconductors right now.
For sure. Intense competition with NVIDIA on GPUs, ongoing battle with Intel on CPUs, plus these wider global uncertainties.
Okay, so let's try and wrap this up. Key takeaways from this deep dive.
Well, first, AMD had a really strong Q1 financially. Revenue and profit beat expectations.
Driven heavily by that massive growth in the data center segment, fueled by AI demand, and also very strong growth in PC chips thanks to Zen 5.
Exactly. But then you have the big caveat, the China export restrictions.
Yeah.
That's a real headwind, expected to cost them significant revenue and hit ones in Q2.
Right. But the company sounds confident, maybe surprisingly confident, that strength in other areas, their product portfolio, will more than make up for it.
That was definitely the message. Lots of strategic moves, partnerships, product launches aimed at driving that growth across AI, data centers, PCs, and other areas.
So the aha moments for me are, one, just how significant AMD is becoming in the AI hardware race. Really challenging NVIDIA.
Yeah, that data center growth number, 57%, really hammers that home.
And two, their resilience. or at least their projected resilience, in the face of losing a big chunk of China business. It shows the breadth of their market reach now.
Definitely. It speaks to the strength they see elsewhere.
So for you, the listener, watching AMD gives you this window into the huge shifts happening in tech, especially around AI and high-performance computing and the intense competition there.
It's a front row seat to some of the biggest trends shaping the industry.
Which leads us to a final thought, maybe something for you to chew on. We see this huge global push on AI, right? Everyone wants in.
Massive investment, national strategies.
But at the same time, we see these geopolitical factors, like the export controls, becoming more and more prominent. So the question is, how will that tension between the global drive for AI and these national or regional controls and rivalries continue to shape companies like AMD and really the whole semiconductor world in the coming years?
Yeah, that interplay between technology ambition and geopolitical reality.
Yeah.
That's going to be fascinating and critical to watch.